Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week's economic calendar is packed with key events and developments that will impact the financial markets. Today, the focus will be on the release of the ISM Services PMI, which is expected to indicate a solid rate of expansion. In contrast, the manufacturing PMI contracted for the 7th consecutive month in May. Other reports to watch out for include Wednesday's trade figures and Thursday's initial jobless claims numbers. Before the Federal Reserve's upcoming meeting, the Reserve Bank of Australia and the Bank of Canada will hold policy meetings this week. Both central banks are grappling with persistent inflation. The Reserve Bank of Australia's decision on Tuesday could go either way. Given the stronger than expected April inflation data, rates are already at an 11-year peak, following a surprise hike last month, signaling the RBA's determination to combat inflation. On the other hand, the Bank of Canada is expected to deliver a hawkish hold, suggesting a potential rate increase in July, unless inflation shows signs of cooling. One of the most anticipated events of the week is the Canadian interest rate decision on Wednesday, and we will be trading this event live with all our members. Also, be sure to watch till the very end, as we will be sharing our technical analysis for today on foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, with the Federal Reserve entering its blackout period, there will be no officials discussing the monetary policy outlook ahead of the June 13 and 14 meeting. Friday's mixed US employment report showed job growth accelerating in May, but wages gains moderate. The increase in the unemployment rate also suggested easing conditions in the labor market. These factors reinforced expectations for the Fed to pause hiking rates at its upcoming meeting, making the first halt since the central bank started its aggressive anti-inflation policy tightening over a year ago. Turning to Wall Street, some investors and traders are expressing caution about the dominance of a small group of Megacap stocks that are driving market gains while the rest of the market remains stagnant. The Nasdaq 100, heavily weighted towards tech stocks, has already gained 33% in 2023, while the S&P 500 reached a 10-month high with an 11.5% year-to-date rise. However, the combined weight of just 5 stocks, namely Apple, Microsoft, Google's parent company Alphabet, Amazon, and Nvidia, now account for 25% of the S&P 500's market value. The concentration of the rally in a handful of stocks raises concerns about the broader market health and the potential for increased volatility if investors abandon these mega-cap holdings. In the commodities market, OPEC Plus met on Sunday to discuss further production cuts in response to flagging oil prices and a potential supply glut. The group's discussions were delayed as influential members, led by Saudi Arabia, aimed to persuade underproducing African nations like Nigeria and Angola to have more realistic output targets. Additional production cuts totaling 1 million barrels per day were being discussed among the options for Sunday's session. These potential cuts would be in addition to the existing cuts of 2 million barrels per day and the voluntary cuts of 1.6 million barrels per day that took effect in May. Lastly, let's take a look at gold. Despite the US debt ceiling being finalized, gold remains resilient. The precious metal experienced a drop on Friday after 3 consecutive days of gains, but it still ended the week in positive territory. Gold prices settled at $1,948.46, down $29.06 from the previous close. Although the dollar strengthened due to the Senate's passage of the debt ceiling deal, gold's positive performance throughout the week reflected mixed opinions among economists on whether the Federal Reserve would hike interest rates again during their June 14 meeting. The stronger than expected job data from May, coupled with rising unemployment and slowing wage growth, divided expectations for further monetary policy actions. Now, let's move on to our technical analysis for the day. First, we'll take a look at USD ZAR, followed by the Dow Jones, and lastly, crude oil and the gold analysis. We'll start with USD ZAR, examining the potential for a rally if the currency pair advances and closes above the primary support at 19.55. Conversely, a break of the support with a close below 19.26 could trigger a decline. Next, we'll shift our focus to the Dow Jones, which recently broke through a primary resistance level. While a correction back down to 33,700 could occur, a close above 33,800 may fuel a rally towards 34,200. In the analysis of crude oil, WTI has been on a continuous rally since Thursday, and a close above 72.2 could sustain this upward momentum up to 74. And finally, in the analysis of gold, a significant sell-off occurred on Friday, potentially leading to a further decline towards 1,943. However, a close above the 61.8% Fibonacci level at 1,951.5 could trigger a correction back up to 1,964.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.